Welcome to Smart Stock Watch. Today is June 26, 2025, and we're diving into Lindsay Corporation's latest earnings report for the third quarter of fiscal 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Lindsay Corporation, a leader in irrigation and infrastructure equipment, has just released their Q3 results, and there's a lot to unpack, especially with their impressive revenue growth.
Revenue and profitability overview. Let's start with the top line. Lindsay Corporation reported a total revenue of $169.5 million for Q3 2025, marking a 22% increase compared to last year. John, what are the key drivers behind this growth?
The growth is primarily driven by a significant increase in international irrigation revenues, which rose by 60%, largely due to project volumes in the MENA region. Additionally, infrastructure revenues saw a 6% increase thanks to higher sales volumes of road safety products. This robust revenue growth also led to a 19% increase in operating income, reaching $23.8 million.
And how did this affect their profitability?
Despite the revenue growth, the operating margin slightly decreased to 14.0% from 14.3% last year due to a less favorable margin mix. However, the overall financial performance remains strong.
EPS performance and analyst expectations. Now let's talk about earnings per share. Lindsay reported an adjusted EPS of $1.78, which is above the forecasted $1.36 by analysts. How significant is this beat, John?
This is quite significant. Beating the EPS forecast by such a margin indicates strong operational execution and cost management. However, it's worth noting that the EPS did decline by 4% year over year, primarily due to a one-time income tax credit recognized in the prior year.
So despite the year-over-year decline, the company still managed to exceed expectations?
Exactly. The decline was expected due to the absence of last year's tax credit, but the underlying business performance was strong enough to surpass analyst expectations.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the irrigation and infrastructure segments fare this quarter?
The irrigation segment saw a 25% increase in revenues, reaching $143.7 million, with international sales leading the charge. The MENA region project was a major contributor, alongside improved sales in Brazil. The infrastructure segment also grew by 6%, driven by road safety product sales.
And what about their strategic initiatives?
Lindsay is focusing on leveraging its global footprint to mitigate tariff impacts and enhance operational efficiency. They're also prioritizing safe and efficient operations, which is crucial in today's dynamic market environment.
Future outlook and market conditions. Looking ahead, what is Lindsay's outlook for the coming quarters?
In North America, demand is expected to remain tempered until net farm income improves. However, severe drought conditions could drive incremental sales. In Brazil, while market conditions are improving, high interest rates pose challenges. The company remains optimistic about international projects, particularly in the MENA region.
And how does their current backlog look?
The backlog stands at $117.1 million, down from last year due to the completion of major projects. This reflects the company's ability to deliver on large-scale projects efficiently.
Key takeaways. In summary, Lindsay Corporation has delivered a strong performance this quarter, with impressive revenue growth and a significant beat on EPS expectations. John, any final thoughts on their investment prospects?
Lindsay's strategic focus on international markets and operational efficiency positions them well for future growth. Despite some challenges in North America, their global projects and strong execution make them a compelling investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts. on Lindsay Corporation's performance in the comments below.